Okay, good afternoon, ladies and gentlemen. Welcome to the 14th of July weekly market review. There are some updates on the market on the tariff front and some positive development on the Singapore side. And who else to better talk to than Mr. Gerald? How are you, Gerald?
Hi Sunny, hi everyone who has joined us today. Yes, indeed, we have seen the Singapore market reaching a new all-time high in the past week, despite all the news around the market tariffs. So, hope to be able to provide an update around what is driving the strong performance of the STI and what are some of the key things to look forward to going ahead.
Yes, indeed. Whenever there are turmoils and volatility in the global market, Singapore market usually stands to perform slightly better than global peers. So the STI is at an all-time high, and also the IPO scene seems to be reviving with a new mega REIT IPO coming. I'll pass the time to Gerald to share with us more details on that.
Sure. Okay, the disclaimer that we'd like to share is that the sharing today is for information purpose only and should not be taken to be financial advice. If you find us helpful, do leave us a review on Google. And if you'd like to join SIAS as a member, you can scan this QR code or go to the website sias.org.sg/membership. And as a SIAS member, you can access various online resources as well as investor education programs. Okay, so in the past week, we saw the US market coming down slightly with the news of the tariff. But for those investors who are vested in Singapore, the good news is that we have seen the STI reaching a new all-time high, getting close to 4,100 points with a 1.6% gain in the past week. Okay, in terms of some of the new tariff-related news flow, we saw that US President Donald Trump announced new 25% tariffs on imports from South Korea, Japan, as well as Malaysia. Specific to copper, there was also a steep 50% tariff that was threatened. And just over the past weekend, Trump also threatened to impose a 30% tariff on imports from Mexico and the EU from 1st of August if they do not actually compromise on some of the trade negotiations over the next few weeks. So the tariff headlines continue to dominate, but at the same time, we have seen that the US market has been a lot more resilient than before. And at the same time, investors are going towards Singapore as a safe haven market. So what do we see in terms of some of the reaction in the bond market? The US 10-year government bond yield has bounced to now about the 4.2% level. So effectively, that is reflecting the kind of expectation by investors that maybe the Fed may not be able to cut interest rates as quickly as before. And at the same time, we have also seen that some of the economic data points coming up from the US has been stronger than expected. Okay, this is what we also see for the 1-year government bond yield, bouncing from below 4% to now about 4.1%. Okay, in the Singapore bond yield side, we also see that slight increase compared to the previous week. Once again, we have seen the 10-year government bond yield coming up to about 2.2% now, compared to a low where it almost touched 2%. Okay, so this is the chart that I really wanted to highlight, and I have shown the STI across a longer time horizon. And we see that the STI index briefly touched 4,100 points last week, effectively now at a all-time high, exceeding the previous high that was reached in March this year before the tariff was announced, and also the high back in 2007. So one of the points that I mentioned earlier is that the Singapore market is seen as a safe haven amidst the global uncertainty around the tariffs. At the same time, we see that the dividend yield for the Singapore market still remains higher than the bond yields, and that is making the yield from the Singapore market appear attractive to some investors. And last but not least, we see more measures that are coming in to revitalize the Singapore market, and all of it is actually driving improved sentiment towards the STI. Okay, so in terms of the top performers, quite a number of the Singapore or S companies starting with S here. So we've got Singtel up 5.7%, ST Engineering up by 3.6%, Semcom Industries up by 3.6%, and Singapore Airlines up by 3.1%. Okay, so quite a number of the industrial names that have actually done well, and once again, reflecting the dividend yields that we see for some of these names. In terms of the worst performance, we've got some slight pullback in the REITs as the 10-year government bond yield actually moved up slightly over the past week. Okay, what has been in the headlines is this IPO in the Singapore market, the largest REIT listing that is expected since 10 years ago. And the name is NTT DC REIT, which is a pure play data center REIT that's expected to list in the SGX on the 14th of July. So if you look at the prospectus, the headline annualized forecast distribution yield that they have actually put out is 7.5%. So we'll spend a bit more time to understand this REIT. So in terms of the headlines, the REIT has got 6 data center assets across US, Europe, as well as APAC, with a total appraised value of close to 1.6 billion US dollars. The occupancy rate was at 94.3% as of December 2024, and the weighted average lease expiry was at 4.8 years. Most of the assets are actually freehold assets. We see here 83.5% of them are freehold, and the top 10 customers contribute about 63% to the revenue of the REIT. Okay, so I mentioned earlier that they've got 6 assets across US, Europe, as well as Asia. So we see here 4 assets in the US, in Northern California, as well as Northern Virginia, 1 in Vienna, and 1 in Singapore. Okay, so this would provide the breakdown across the different markets. We see here US would be where the assets are predominantly in, with the 4 assets in Northern Virginia as well as Northern California, and then 1 asset in Vienna, which is a fast-growing market within Europe, and 1 asset in Singapore, which is the second largest data center market in APAC. So, what is something that is worth noting is that the lease expiry of the existing assets are fairly well staggered. There's no single financial year with expiries of more than 20%. And based on the information that was released by the REIT, they have had a 98.3% average customer retention over the last 3 years. Okay, so in terms of the projection that has been put out by the REIT manager, they expect the revenue to grow by 5.2% from 9 months 2025-26, which is the forecast year from 1st July 2025 to 31st March 2026, to about US 234.8 million in FY 2627, which is the projection year from 1st April 2026 to 31st March 2027. Part of this increase in revenue is driven by an improvement in the occupancy rate, which is expected to reach 97.6% in the 9 months FY 2526 to 97.7% in FY 2627. Okay, what is also driving this improvement is expected to be from the strong demand in global data center expected. So we see here that while the supply of data center has grown over the past few years, the vacancy rate has actually come down from 9.5% in 2020 to about 3.2% in 2024, and that is a reflection of the strong demand in data centers that we have seen. Okay, the other part to note is about the sponsor. So the sponsor of NTT DC REIT is NTT Limited. And what we see here is that in terms of the global data center portfolio, that spans about 2,200 megawatts of capacity, and that spans across the data centers that are currently under construction, as well as data centers that are in operation. So of this 2,200 megawatts, we see that already more than 1,400 megawatts are in operation, and there's another 858 megawatts that's under construction. Okay, the other thing to note about the sponsor is that they are one of the top 10 data center providers globally as of the fourth quarter 2024. We see here that excluding the Chinese market, they're actually the third largest globally. Okay, in terms of the gearing, the REIT is expected to have a 35% leverage at the IPO. So that gives them a debt headroom of about 450 million towards the MAS aggregate leverage limit of 50%, should it wish to make any acquisitions. Okay, so this is the forecast that the REIT manager has put out. So the annualized distribution per unit in US cents is expected to be 7.5 cents for forecast year 9-month 2526, and that will represent an annualized distribution yield of 7.5%. Okay, so in terms of how that compares with some of the peers, we've got two other pure play data center REITs in the Singapore market, including Digital Core REIT as well as Keppel DC REIT. And also we've got some of the other REITs here, Mapletree Industrial Trust and CapitaLand Ascendas REIT, which also has got data center assets within its portfolio. Okay, so the REIT is expected to list at 2 p.m. on 14th of July. So that's something that investors will be keeping a close lookout for. Apart from that, we also go into the US earnings season with some of the banks starting to report their results this week. And we also have the US inflation data that will give us an update around inflation trends in the US and whether the Fed is likely to keep interest rates unchanged in the upcoming meeting or has room to be starting to cut interest rates. Okay, so with that, I'll hand over to Sunny, who will share with us the technical analysis.
Okay, thanks, Gerald, for that update on this new REIT IPO that is coming to Singapore today. So, just to give you a very balanced view, I mean, among all the digital or sort of data center REITs that we see, this is one of the data center REIT that offer the highest dividend yield. And whether that could sustain or not, that is my question mark. But then definitely this REIT is definitely looking very attractive. And also we are also looking at some of the other developments in Singapore as well. This morning, the news that just came in was Singapore managed to dodge a recession with the GDP growing 1.4% last quarter compared to the contraction that we see in the first quarter of this year. So that is good news. So Singapore economy is still performing well, and STI, as Gerald said, hit an all-time high. And this morning, we are still seeing STI pushing upwards to above the 4,100 point, with the high now standing at 4,108 points. So where is STI likely to head from here? Definitely all the indicators are showing signs that the index now is at an all-time high and in the overbought region. So we have to be very careful here on where should we get in to chase the high of the Singapore markets. Okay, So you can look at the STI index. It is trending very closely on the upper bound of that Bollinger Band, with the Bollinger Band reading now at 4,122 points. That is the first level of resistance that we are looking at. If it hits 120 and above, we should see some technical pullbacks from here, but that doesn't mean that it's the end of the rebound that we have been seeing so far. Okay, so the next support level would definitely be the previous high that we saw in the March-April period earlier, which is around the 4,005 points level. Okay, so the 4,000 handle will now be a very strong support for the STI index, with the next level at 3,982, which is a 20 days moving average, closing in on the 4,000 handle as well. So I'm looking at STI. If STI has a pullback to the 4,000 level, that could be a strong support level to accumulate on the STI index. So with the economy doing well, GDP doing well, the Singapore investing, or the Singapore capital markets also doing well with new IPOs coming in. There are several of them. I think the index is in a very good place to trend higher in the mid to long term. But let's say if there's a bit of a sort of headwinds in some of the global macro news, which will cause some knee-jerk reaction, Singapore being a safe haven would definitely be able to capitalize on that. So any pullback towards the 4,000 level is a good accumulation level to me on the STI index. Next, let's move to the US indices. Let's start with the Dow Jones Index, which will be most impacted by the earnings announcement this week, because as usual, when we start the earnings season, it's usually the big banks, the big US bank that starts making the announcement first. And that gives us a very good gauge of also how the US economy is doing. But so far, as of what the economic data that we have been monitoring, there has been no signs of the US tariff impacting the US economy yet. Okay, so the bank's results will definitely give us another look at that as well, and could confirm that, hey, the tariff impact is very minimum at this point of time. Okay, so for the Dow Jones Index, we are also closing in on the all-time high, which is earlier seen in the early part of this year, around the February period. And that level, let me pull down this chart a little bit, is at 45,073 points. We closed last week in the rate for the US indices. We are down at 44,371 points. So definitely this, I view that last week, the headline movement about the tariffs, which as last week I have said, I view it as something as a tailwind in the rear view mirror. But then that Donald Trump could still sort of send out letters and stuff like that. But that tariff rate of 20-30%, right, is much, much lower than the 100-200% that he announced in early part of April. So that is a good thing, and investors might be growing immune, or even myself, I have sort of a don't think too much about the tariff rates right now, but more about the upcoming earnings season, of which are the companies that will perform well, that could give us another leg up higher. So on the Dow Jones Index, we are slightly below the upper bound of the Bollinger Band, now at the 45,399 or 45,400 points level. So that is the headroom that we have to go up to 45,400 if, let's say, the performance of the banks is doing well. Then we also look at the support level, which you can see the green line right here. That is the 20 days moving average now at 43,500. That will be the first support level that we are looking at. Now, worrying thing about the Dow Jones Index is I see, looking at the MACD indicator, it is showing signs of a convergence. And the last few trading session, that is caused by the tariffs headlines that were announced on the copper, 50% tax on copper. So this is something that we need to watch out for. And on the RSI is also on the pretty high side. We have actually reached the overbought level on the 3rd of July, the early part of July. So that could mean that the index is in a slightly overbought position right now. It has come back down to 63. So we are really looking forward to the earnings season justifying the current valuation of the indices right now. Okay. So next, let me move to the broader index, the S&P 500 index, which has already been on track keeping very close to its all-time high, now at the 6,290 points level. So definitely indicator-wise, MACD indicator is showing is elevated, and there is a sign that whether this recovery could go another leg higher. But I think as of now, index is at a very high level. If let's say there's any misses on the earnings season, especially on the broader index, the S&P 500, that could give us a pullback. So definitely, in the last two scenario, in the June period and the May period as well, you can see that once the S&P 500 comes down to the 20-day moving average now at 6,133 points, that could be the accumulation level that I'm looking at. And with that, the lower level of the 50-day moving average at 5,009 and the Bollinger Band at 5,912 points, this is a key and definitely a very strong support level that we look at that could give the S&P a bit of consolidation before going up the next leg. Okay, so indicator wise, MACD is, I would say, more or less neutral, and RSI is very close to the overbought region, and that means that a lot of sort of a earnings expectation has been priced in right now, and any misses could cause a pullback on the major indices in the US. Next will be the most volatile and tech-heavy Nasdaq Composite Index. The all-time high now stands at 20,655 points. A bit of headroom up. You can see that the upper bound of Bollinger Band at 20,920 points, or the 21,000 handle, I would say, would see very strong resistance. And you can see that indicators wise for both the MACD and RSI has similar performance to the broad index S&P 500, both showing that the rally that we see so far since the bottoming out in April might have already reached its peak level after bringing the index back to the all-time high. So the valuations now are all priced in, and hence there is very little headroom for any misses on the upcoming earnings season. RSI is at 68 level, also just 2 points away from the 70-point mark overbought level. So that means that investors have to be careful buying into the index at this level. But definitely, if there's any pullback, that could be a good opportunity to get back in, especially if it's caused by tariffs. Seen on the 20-day moving average, the key support 20,073 points. That is the 20-day moving average. And then with the confluence of the lower bound of the Bollinger Band at 19,200 and 19,300 level, that's the lower bound of Bollinger Band with the 50-day moving average. That will be another strong support for the Nasdaq Composite Index to look at. So a lot of things are coming up this week. We have the earnings season starting. We have the CPI data also coming up. Definitely, there will be a lot of movement in the markets. And we also have upcoming SIAS also to update you. So any other things that you're looking at, Gerald?
Yeah, so I think like you mentioned, we have got many markets actually close to the all-time highs at this point in time. At the same time, the global tariff situation remains uncertain, and we have the upcoming earnings season where we'll keep a lookout on how the companies are performing and whether it matches up to their valuations.
Yes, so all these developments is a very exciting time for the market in the next few weeks. So we look forward to continuing to update you with all the latest market developments. So that's the time that we have for today. Thanks, Gerald, for joining us today, and thanks everyone for watching. We will see you again next week in the next weekly market review. Goodbye.
Thank you.